Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. I'm so glad you're here. Well, the market has been in this incredible run-up, right? Incredible run-up since back in October, 6 straight months of up, but it's really been a lot longer than that, right? This big bull market, when did it really start? Back in 2009. 2009, we've been pretty much 15 years of a straight upward bull market, right? Okay, now that's fascinating. Now, what does that cost us? At what expense has that cost us? Well, we had to print 30 trillion extra dollars that we don't have to make this bull run extend itself. And now it's starting to extend itself on what is called margin debt. Margin debt is at a record high. So they're trying to keep the bull market alive with more debt. The more debt we can get, the more this bull market's going to continue up. It's a debt-ridden bull market bubble, if you will. That's just my take. Now, a lot of the moon boys think that this is a normal market and that we just go up all the time. They get actually shocked if we have a down day. They go, what happened? We had a down day. Look, the market does not only go up, the market also goes down. Now, this will reverse itself in time and will start to come back down. And the reason it will probably reverse itself is because of forced selling. You see, high prices will correct themselves. People will not want to buy the market up here. So a lot of people will become sellers. They will be trying to take their profit. Now, everybody cannot get out at the same time. It's like a crowded theater. You yell fire. Everybody's trying to fit through that little door. You can't all get out at the same time. Some people will make it out, but the others will not make it out. And as the market comes down, they will be forced to sell. Now, why will they be forced to sell? Because they have margin debt. A lot of people trade the stock market on margin debt. 2, 3, 4, 5 to 1. Okay, so they put in $10 and they buy $50 of the market. That's margin debt, right? And as the market goes down, their equity goes away and they have this margin debt. Now, they don't get to decide when it's sold. The margin is sold by the brokerage firm because they want to stay solvent, right? If you're levered out on margin, they don't think you're going to survive, they will sell all of your stocks for you. So the forced selling will continue the pattern to send the market lower. That's basically what will happen. We don't know exactly when. I keep waiting for us to get below the 20-day, but forced selling will bring the market down in the stock market. It will also be what brings the market down in the real estate market. Now, a lot of people are going to lose jobs when the economy goes, when the stock market goes, when things start to have mass layoffs. People will lose their job. They will be forced to sell their house. They'll be forced to get out. That's the only place they have money left. They can't borrow any more debt or credit, as they like to call it. The mainstream media always says they ran out of credit. Well, they couldn't borrow more money. Their debt was too high. Their debt to income ratios are well off the charts above 50%, right? Okay, and they can't survive that, so they have to put the house on the market. They can try to get a HELOC, but they can't get a HELOC because they have too much debt. So they put the house on the market. So it'll be the first one out, the next one out, the next one out. See, houses are sold at the margin. When people have to sell, they have to take any price they can get. They can't wait for the market to go back up to where Billy Bob got out at. So they will have to take whatever the price is now. Maybe 5% below, 10% below. If you wait, it'll be 20%, 30%, 40%. It's kind of a death spiral on the way down. But the market's still strong. I admit that. The stock market at record highs, house market close to record highs. Okay, that's all fine. But what's going to bring it down is forced selling when it happens. Now, I'm not saying it's going to happen next week, but it will happen. It will happen. This is what happens when people get too much debt. Now, I want to talk a little bit about the Federal Reserve. Okay, the Federal Reserve came out with the news that they lost $114 billion in 2023, which is interesting because nobody audits the Federal Reserve. That's just what they say they lost. Okay, you lost $114 billion. Well, that sounds really bad. Well, Federal Reserve, they don't care. They don't pay for that. You know who pays for that, of course? Me and you, right? We get the bill. They send the bill to the treasurer, and the treasurer pays them out of the taxpayer money. Well, they don't have taxpayer money, so they got to print some more bonds that the Federal Reserve can buy them so that the Federal Reserve can recover its loss. But it's really, I'm sugarcoating this. It's much worse than this. It is much worse than this. I mean, you can do the math, right? Okay, now in 2008, when this bull market started, the Federal Reserve had $1 trillion. $1 trillion on their balance sheet. And now they bought and bought and bought and bought and bought, and it's closer to $8 or $9 trillion on their balance sheet. Well, what were they buying? Well, they were buying the bonds, right? Because nobody wants to buy our bonds anymore. So the Federal Reserve, they have to jump in and buy our bonds. Well, let's think about this. What else were they buying? Well, they were buying the mortgages, right? I mean, nobody wanted to loan money for 30 years at 3%. Who's the only one stupid enough to do that? Well, that would be the Federal Reserve. They bought $3 trillion of mortgages, about $6 trillion worth of bonds, so about $9 trillion on their balance sheet, and they ran a little bit off, so we're at $8 trillion, in between $8 and $9 trillion right now. Now, believe me, we're going a lot higher. We're going to reach 10 trillion, 20 trillion, maybe even $30 trillion, which is complete insanity. I mean, it's just completely insane that we would allow the situation to get this out of control, but this is where we're at. So they say they lost $114 billion last year. Now, when did they start to lose money? They started to lose money in 2022. See, the Federal Reserve has always made money because they've always been able to print the money, right? They've always been able to print money, and they get they buy the bonds, and they collect the payment on the bonds, and they would always be a money-making machine. But for the last 2 years, the Federal Reserve has been losing money. Now, can the Federal Reserve go broke? No, they can print as much money as they want. But they're kind of just like the bank system. They're really not solvent if they didn't have a printing press. Now, we can do the math here. We can do the math. Okay. They got about $9 trillion, $3 trillion in mortgages. Now, what happened to the mortgages when they went from 3%, or like yours? Yours is locked in at 2.8%, right? So you're locked in there. But now let's say the Federal Reserve, they bought that mortgage when it was at 2.8%. Let's say it was a mortgage for, $1 million. Okay, $1 million at 2.8%. But now mortgage rates have gone to 7%, right? 7%. So what is that 30-year mortgage, right? You got a 30-year payment plan on $1 million at 2.8. You're the winner. I agree with that. That's great, right? That's great. You got locked in. Now, who's the loser? The loser is the taxpayer, me and you again. So you're kind of losing a little bit back. But okay, so the taxpayer is the loser because the Federal Reserve, they bought that mortgage for the $1 million, gave the bank the $1 million for it, and they bought it. Okay, the bank initiated, they sold it to the feds for $1 million. All right, so what's that mortgage worth now? Well, it's not worth $1 million, right? Well, at 2.8, it was worth $1 million, but at 7%, what is that? It's worth maybe $700,000 now. Okay, over 30 years, 2.8 to 7. Okay, so it went down by about $300,000, about 30%, right? Now, the bonds are the same way, right? As the interest rates on the bonds were 0% or 0.25%, right? And the Federal Reserve would buy all these bonds, but now bond rate, they shot up to 5.5%. What happened to their $6 trillion in bonds? Well, it lost about 20 to 30% of its value, right? So the Federal Reserve has really lost somewhere between $1 and $2 trillion. Let's call it closer to $2 trillion because I believe it is closer to $2 trillion. Now they write off $114 billion. That's what they tell you the loss is. That's what the taxpayers on the hook for. But now if they had to mark to market, meaning if they had to get everything off their balance sheet, we would be on the hook for over $2 trillion as of today. It's probably going to get much worse than that. But the Federal Reserve is really losing money hand over fist. It's not their money. They don't care. It's our money. We're going to have to pay them for that. And that just makes the whole circling the drain of the debt thing. We're 35 trillion in debt. We're going to have to go farther and farther into debt. But this is going to go on to, you're not going to pay this off. Your kids aren't going to pay it off. Maybe the grandkids will get it figured out. But my thing is that we're going to get a reset. Okay, now why are we going to get a reset? Well, let's talk about this. Okay, you got the banking system doing the same thing as the Federal Reserve's doing, but the Federal Reserve will blame the banking system, right? Like Silicon Valley Bank, right? They were doing what the Federal Reserve was doing. They were buying the long end of the bond market. Okay, so they were buying all these bonds, and then the bonds lost 30%, right? So they were doing the exact same as the Federal Reserve, but they're a bank. Well, what happened? Well, word got out on the street that the bank didn't have the money. So there was the run on the bank, and we had to bring in the FDIC to bail the bank out, right? So they come in, they bail out Silicon Valley Bank. Okay, well, that was the first one to topple. 5 other ones, 5 of the biggest 50 have already gone down. 10% of our banks are gone. Now, by the time this is over, it will be closer to 50% of our banks will be toppling over. Some estimates maybe we only lose 1 out of 3 banks. But all the banks right now are insolvent. They've been doing what the Federal Reserve has been doing. They've been buying bonds, right? And those bonds went underwater. Okay. Now they got, now some of them are holding on to mortgages, just like the Federal Reserve got 3 trillion in mortgages, but some of the banks, they hold on to them. They don't sell them all to the Federal Reserve. They hold some for their own portfolio, and those are way underwater, but the big ones come, the one that's just going to topple the banks, one after the other, and that's the commercial real estate paper. Regional banks are holding so much commercial real estate paper. Now, what's happened to commercial real estate? Well, the buildings are sitting half empty at best, and the values of the property have lost 70-80%, and the commercial real estate paper has gone down by at least 30 to 50%, right? So when these loans come due, you see, they don't have to mark them down. You see, the Federal Reserve is not marking down the $2 trillion. They're telling you they lost $114 billion, and they've never been audited. Nobody is allowed to audit the Federal Reserve. They are like the god of our country. They have the last say. They can do whatever they want. Now, how we gave them this power is beyond me, because they are not the government. We do not need the Federal Reserve. But anyways, they got this power where nobody can audit them. Whatever they say goes, and whatever they want to happen, believe me, it will happen. They are running the country. It's not the government. The Federal Reserve, the central banks are running this country. That's my opinion. That's my take. Okay, but I got carried away. I got distracted. But all right, so we got the commercial paper is going down, right? Okay, commercial paper completely worthless, but they don't have to market to market. If the Federal Reserve had to mark to market right now, they'd be down $2 trillion, which would be our responsibility as a taxpayer. No bank is solvent right now. None of them, not even the big ones. Not Wells Fargo, not B of A, not JP Morgan, none of the big ones, none of the little ones have your money. They're all underwater, right? Now, if there's a run on the banks, they would have to sell their assets. They would have to sell the commercial paper. They would have to sell your mortgage that they're holding. They'd have to sell the bonds that they're holding to get the money to give back to the people that put money in the bank, to the savers, if you will. Okay, so they would have to sell everything at the market, and that's called mark to market. They would have to sell at the market. They can't get that price up here. Although the Federal Reserve came in after Silicon Valley Bank went under, and they started the Bank Term Funding Program, which said you could take all your underwater assets, give them to us, we'll put them on the balance sheet. They don't actually show them on the balance sheet, but they take them, give you 100% of the money as a loan that you got to pay back. Now, supposedly that came to an end, right? Well, it didn't come to an end because they can't pay them back, because the banks do not have the money to pay them back, but they cannot give them any more assets. Okay, so now any bank out there that has a run on the bank right now will have to take their assets, sell them at the market, and they will be completely insolvent, and you'll probably get 30 cents on the dollar, right? Of the money that's sitting in the bank, they'll give you 30 cents of it. Well, but Mike, We got the FDIC is going to come in and give us the rest of it. Now, you may be right? But the FDIC has $100 billion for $20 trillion in assets. So they don't have your money. They have less than a penny of it. Okay, so where's the money going to come from? We got to go back to the government. They got to start printing the money, 10, 15, 20 trillion, right? Well, okay, well, how they do that? Well, they got to issue bonds. Who's going to buy the bonds? It goes on the Fed's balance sheet. Fed already lost 2 trillion with them, but they're the only buyer. Nobody around the world wants to buy our bonds anymore. Look, we are in big trouble. Nobody talks about that. You won't hear about this on mainstream media. You go on mainstream media, everything's wonderful. The economy's booming. We got credit expanding everywhere. Credit expanding? What they're talking about is debt. You got debt everywhere. This is a debt-ridden society. It's a debt-based economy. In the old days when I was young, we used to manufacture things, and we were a wealth-based economy. Now we're a debt-based economy. If we can, as they would call it, expand credit, then we can get the economy to boom some more. In other words, if we can go farther in debt, we can continue to live beyond our means. Now, right now, in the United States, every household in the U.S. owes $300,000 to the federal debt, right? $300,000. Now, I believe they're going to get that number well above $1 million per household. Now, I don't know if your household has the million to give the government to pay off the loans. Maybe you do. Okay, that's great. Most households do not have the $300,000 right now. That's where we're at right now. But that doesn't count the unfunded liabilities, doesn't count Medicare, doesn't count Social Security. They don't have the money. The government's running these big, huge Ponzi schemes. Now, I know it's all going to come crashing down, and I know I'm preaching to the choir, man. You should see some of the comments. Anyways, one guy, he's a first-time listener, told me he's a last-time listener. Okay, so he's leaving the channel, but he's saying, this guy's crazy. He should be in a mental institution. Maybe I should. I love to study this stuff. I love to tell people what's really going on. The other comment, this guy's just a snake oil salesman. Would you leave me a comment and please tell me what I'm trying to sell you? I'm not trying to sell you anything. Matter of fact, every day I pray that what I'm telling you doesn't come true. I don't need it to come true. I've got a good life. I don't want to see this come true. I just have a little bit of common sense, right? A little bit of common sense will tell you we cannot continue down this path. Now, the people that you have in office, they don't care about you. All they care about is staying in power, and they will continue to print money to buy whatever it is you want to go farther in debt. We're going to expand that credit out so that you can live beyond your means. Look, this is not going to be sustainable. It's not going to last much longer. Maybe we got 3 years. Some people say we have 5 years left. I don't think we have 3 years left. Matter of fact, it could be 6 months from now. Nobody knows exactly when it's all going to come crumbling down, but we are living in a house of cards right now, and it is not a good situation. The banks are in terrible trouble. If they have to mark to market, they would all be out of business. The Federal Reserve, they would be gone if we didn't let them print any more money. Let's pass a law. Let's write our congressman, pass a law that we do not spend any money that we don't have. What a concept. Oh no, we won't survive, Tall Mike. And you're right, we would not survive that. That's correct, it would come crashing down. We would do the reset. That's just my take. I got a little carried away. Don't mean to scare anybody, but that's just what's on my mind today. Give me the thumbs up if you like it. Punch the subscribe button if you really like it. Get out there, everybody. Have a great day. Happy Monday.